Good morning. Predicted Traits family. Hope everybody's doing well. Thanks for tuning in to Morning Prep Friday, October 21st, end of the week. OPEX, so monthly option expiration today. Let's do a quick little review. Yesterday on ES, the S&P futures mother market, we opened, took a little dip to our open range buy zone, rallied up from there through our open range sell zone to the midline, where we rejected, set lower highs, and then finally rolled over, back down through our open range buy zone, through the daily 15 and daily 8, this little orange and blue line here, and down to our next key level, 36.68, right near the midline down. We bounced from that 36.68 back to the daily 8 multiple times before closing, and now we're dealing with a little gap down. We're pulling up and arriving at our next key level from 36.68 down to 36.39. So likely going to be opening kind of close to that. Before we get too far into where can we go today, let's take a quick look at our economic calendar. Let's see, today, not a lot going on. At noon, we have some inflation data that comes out. Next week, we have some PMI data on Monday. We have the Case-Shiller Home Price Index on Tuesday, so some home data. Wednesday, we have trade in goods and more home data. Thursday, we have some GDP numbers coming out. So definitely expect on Thursday there will be extra volatility. We have our initial jobless claims like we always do, some core capital equipment. And then next Friday, we have some employment data and PCE. So next Thursday, Friday are the big economic data dumps. We also have that University of Michigan consumer sentiment and inflation. So pretty light early in the week, and then some definite big data points, right? GDP, PCE, definitely going to tie into inflation, and there will be reactions. So, back to where can we go for today? As you can see, we're already opening down near or we're close to open, and we're down near our purple hash line, and this key level at 36.39. If we start to lose those, we're coming down to test our outer shaded region at 36.21 and 36.10. We could see a bounce and some kind of recovery, maybe a half gap, or maybe even filling the gap. Wouldn't be surprised if we tried to hold this 36.39, come back to tag 36.68, pretty much filling the gap before actually heading lower. I'm going to go ahead and switch over to our normal set of tools since we've seen where the beast levels lie for today. There we go. So we do still have a number of squeezes in place. Let me pull up my normal watch list. Actually, I'll take a look at this as well. All right. So with yesterday's drop, we are below most intraday moving averages, everything from a 4-hour up to smaller time frames. So all of our moving averages are above, and we can fight up to them, but first reaction should be rejection to continue down. We have changed trend, Um, these are basically moving averages from each time frame, and it's the 45 EMA. So either way, we do have a number of squeezes in place, basically all time frames. So we have our 2-hour and 4-hour squeeze bottom sitting right below this 36.39. So like I said, I would not be surprised if we try to hold these squeeze bottoms, get a little relief pop up to 36.68, maybe even to the daily 8 to close the gap before heading back down. That would also align with getting up and testing our 30-minute moving averages and then rejecting back down. So don't be surprised for that cover pop. Can we just sell through these squeeze clouds and not get that cover pop? Yeah, we can absolutely gap down and go. So key levels, we have 36.21, 36.39. So we've got some support here where we could see that bounce. But if we just keep going through that, we are back to 3600, this little shaded support zone, which spans from 3587 to 3596. And then down to our next key levels at the bottom of this daily squeeze, 3571, 3541. Not necessarily saying we get down there today. We already, let's see, we're down 30 points, closed around 3676. This would be over a 100-point drop from where we started, or closed and then open. So this might be a little bit out of reach of a normal day. We are at monthly option expiration, OpEx Friday. We can see more of a choppy Friday as they roll, out of this month's contracts into next month's contracts. So don't be surprised if we do hold and come up and just kind of bounce around these key levels up here without breaking down. But we can absolutely break down today. We have to see, how hard they come in selling now that we've kind of given up where we were settled for most of the week. We're kind of arriving back at where we started the week on Monday, pre-market. So let's see if we can find the support, get a little bit of a cover pop back to some of these moving averages where we could then reject and kind of chop or head lower. Can we get through those moving averages and move back to the daily 21? Yes, absolutely, but there's not a lot of good news going on right now. We got through earnings. Snap was a pretty negative reaction, so we'll probably see some ad-based companies head down today, like Meta and whatnot. In fact, Meta already dropped hard with Snap. About the only reason we might rally is just because we have until next Thursday, till the next big economic data comes out. So just since we have a number of days where we don't have anything that can move the market coming out economic data-wise, we could see a little relief rally into that PCE data and that GDP data, and then that could send us dramatically lower. Just talking through some scenarios. Obviously, anything can happen in this market. On NQ, just like on ES, we are arriving back at where we started the week, Monday. And at this key zone, right at the bottom of our squeezes. So let's see if we can hold this key zone from 10,890, 10,042. This is kind of the first time all week that we've been under 11,000 during, we're going to open the cash session below 11,000. Every other day of the cash session, we basically opened right at 11,000 and took off and never came back. So we could find some support opening near this zone, get back over 11,000, fight back up to this daily 815 before rolling over and heading lower. So just the same idea that we could get a cover pop. Anytime we have a gap, we should have a scenario for a potential gap fill and then see from there. If we can't hold this zone, looking for it to get up to the daily 8 here around 11,075, daily 15 around 150. We've got this key level at 11,200, daily 21 up at 280. Near our squeeze top. This would be the 2-hour squeeze top, the 4-hour. But if we start to lose our zone and slip, then likely coming back to retest some lows around this 10,750 and key level here at 10,656 at the bottom of our daily squeeze. Ready. Kind of right at the 1700 again. This is the first time during this week that we'll be opening the cash session below about 1710. So let's see if we see some support at this 1700, come back to fill the gap, maybe make it up to our daily moving averages. Those are the targets to the upside, but if we roll over 1680, 1656, back to recent lows. YM. Maybe holding up the best because it's still above its moving averages. Has the daily 8 and 21 right here at about 30,150. Has the daily 15 just a hair below 30,000, big psych level. We've got our stack squeezes here that are very thick, and we know from experience it can be hard to push through those when they're nice and thick. Just like yesterday, we fought up to them, then we reject and fall out of them. Today we are at the bottom, so we could see that cover pop. Looking for it to get back up and test 30,500, big key psych level. If it can get up there after filling the gap, and if it can go further, back to 30,800 at the top of this daily squeeze. But if we start to slip below 30,000 and lose this daily 15, likely coming back to our last bounce point near this key level, 29,650-ish, 640. And then we've got key levels below that, but like I said, we have some thick squeezes here. So it'll take energy. We'll have to push against them. We'll get a bounce, push against them to get them to open up and fire lower. Again, anything could happen. We could see a big rush in Friday volume to sell things like we have seen the last few Fridays. But let's see if we can hold these squeeze clouds, get a cover pop, and then we'll go from there. Apple. Oh, Apple, same thing. Very big, thick squeeze clouds. We fought from our 138, 138.8 up to our 144, 145. Chopped around from the daily moving averages to that zone. And now we're slipping just a little, but we're still not near Monday's lows, like we're seeing on some of the indices. So let's see if Apple can be a little strong today, maybe slip down and bounce 141 and then come back up to test 143. If it can go past that, back up to our zone above. If we start to slip 141, then we're coming down to this zone below. If we slip 141, 140, then we're talking 138 and 138.8. On AMD, pretty much been pinned between this key 56 and this 58.73. Reached past it a couple of times this week to get to 60. Let's see, Wednesday I called out the 60 call at 20 cents. We swung some of those. They got up to $1.10 for a full 5x on that trade in that morning pop. And you could have shorted it right back playing those 58s. Was a decent trade as well there. So, again, let's see if we can hold 56, catch a cover bounce to fill the gap, and maybe back up to this key level. But you can see our squeeze clouds are closing around those key levels, so likely going to stay in between them. Amazon made that push from a 106 tap where it closed on Friday, tapped at pre-market, made it up above this 113.5, and even made it to our moving averages in 118. Yesterday, made a great move from that 113.5 to that 118, and now we're back at the 113.5. If we start to slip that key level, we don't see it bounce, quickly after open. Likely coming down to this 112 for a test of these squeeze bottoms. If that gives out, coming down to this 110.5, where the 4-hour squeeze bottom sits. Should that give out, coming back to the daily squeeze bottom, 108, where we started the week. But if we can hold up and catch a cover bounce, we've got our moving averages above as targets if we can see any kind of rally today. BA. Been on a hard trajectory up. Now we're starting to break. We do have our squeeze clouds and these daily moving averages sitting just below at 136. So we'd love to see it hit 136, catch a bounce back up to 138.5, and trying to get to 140. If we start to give out that 136, coming down to 134 in the next squeeze, and then 132 where that daily 15 sits. Cat. Ugh. Big gap down. Let's see if this 4-hour squeeze can provide support around 177, 176.5. Bounce cat back up to moving averages around 178, 179, and psych level 180 and 181 where the daily 8 sits, which would fill the gap. If it keeps slipping past this 4-hour squeeze bottom, likely coming back to this 173 key level. Coin. Man, coin has been making some wild moves lately. Big old pop yesterday, 2 moving averages, then right back down, and we're starting to slip our key level. If we keep slipping below this 61.83, we've got a little tiny 4-hour squeeze at about 60.5, and we've got this key level at 58.64 at the bottom of the daily squeeze. If we can find support and start to bounce above 63, let's see if we can get to 65, 66, maybe even 68, but not expecting some kind of crazy rally today. Google slipping and gapping down with the snap reporting earnings, ad space, yada yada. We've got a 4-hour squeeze down at 97. So let's see if we take a dip there, tag squeeze bottom, then start to get that cover bounce. If we can catch a bounce, we're going to test this 98.78 and psych level 100. If we can go past filling the gap. Actually, I think we close around 90. Yeah, so getting back to filling the gap would be getting back to about 100, right? If we start to give out this 97, we've got this zone of support that I've marked between 96 and 94.5, down at the bottom of this daily squeeze. GS. Holding up to its moving averages and squeeze bottom. Let's see if we can get a bounce. Wouldn't need much to fill the gap. And if it can go past that, 315, 317.5. But if we keep slipping, we'll probably go through these moving averages from 308 down to 304. And if it goes past that, psych level 300, where that 4-hour squeeze sits. JPM, holding up really well also. If it slips, let's see if it can hold the daily 50 at 114. If not, then we're going to cascade through to the daily 21 around 112. But if we can hold that 114, looking forward to get back up to fill the gap, 116, 118, 120 if we actually see a rally today. Meta. Big old dump from snap right down to daily squeeze bottom. At least I like that we have a big fat daily squeeze cloud here. If we keep slipping, we're coming down to test 23 right below the bottom of that daily squeeze where we could see a bounce and start to maybe fight back. You know, filling the gap back to 131.5 might be a big ask today on Meta. You know, let's see if we can find support. 130 might be the target. I'd be surprised if we go past that, but we'll see. Microsoft back at this 232. Add some squeeze bottoms. Big key level. Let's see if it can hold. Squeeze bottoms can hold. Bounce us back up to fill the gap back to 236. And if we can push a little more, the daily 21 at 238. You know, in every name, we set lows, we've made our way back to the daily 21, and now we're starting to look like we're going to sell off from the 21. Wouldn't be surprised for a quick bounce to retest before selling off. Also wouldn't be surprised if this is all the test we needed on most names and we are going to sell off. So just have to be cognizant of that. Netflix still sitting way up in the zone post earnings, right? Pretty much almost tapped the daily 200. You know, obviously I've not been playing it. You know, we have it a gap up. It's basically just chopping around that range. And now we might start to slip back. If it does keep slipping, we've got psych level 260 at the bottom of these squeezes. If that gives out, probably coming back to this 252. But if we can hold that 260, it might catch a bounce up to 270, 275, 280, where that daily 200 sits. NVIDIA. Kind of opening in the middle of this big 4-hour squeeze. Let's see if it wants to, or, you know, if we just keep selling at open and get to squeeze bottoms, NVIDIA might drop down to this 116. We've got, you know, kind of a wide zone of support, but we've got that squeeze bottom there. If we can catch a bounce, 122 would be back to filling the gap near this daily 15. If we can push any further, 124, 125, where the daily 21 and this squeeze top sit. QQQ. Whoa, yeah, QQQ. Sorry, I thought I skipped a name. At these squeeze bottoms, zoom in just a hair. At this key psych level of 265. So let's see if 265 and these squeeze bottoms can give us support. Getting back to the daily 8 at 269 would be filling the gap. If we push any further past the gap, we have the daily 15 at about 270.5. We got a squeeze cloud at 272 and the daily 21 at 274. But if we can fill the gap and then come back, or we can't hold 265, we are slipping down to 264. And if we push through these squeeze bottoms, 260, big key psych level near the bottom of daily squeeze. SPX. Gonna be gapping down only about 20 points. So we're gonna be near this 45. So it'll be kind of in between moving averages and a Keltner down at 36.20. See if it can bounce back to fill the gap. If it keeps going, target would be 3,700, where this daily 21 is basically sitting. And if we keep slipping, kind of first target on SPX is this daily Keltner, first Keltner down around 36.20, let's call it. Then 3,600 and 35.88 would be next key targets. We do have a gap, if you'll notice. Let's go ahead and mark that gap. Basically, I just draw a rectangle from where it closed to where it opened. So we're going to be opening near this gap. We could hit that gap and bounce back to fill this gap. And then if we roll over and lose that 36.40, we're going to come back to fill this gap likely. SPY. Yeah, technically SPY also has a gap, and we're going to be opening right near it, right at that key 362. Already hit it and starting to bounce pre-market. So let's see if we can hold 362, make our way back up to 365 to fill the gap. If we can push past that in the squeeze top at 366, we've got this whole drop from yesterday to try to get back to 370. But we could easily reject around that 366, 365 if we do get up there to fill the gap. And then we're coming back to 362 and 360. And it looks like filling the gap would be getting like to 358-ish. Tesla. Basically, let's see if we can hold yesterday's low, big key cycle level of 200 if we slip down. If we can bounce up, need to take out 206, 210, and we have some squeeze tops at 212.5. Could stay contained in this range today. UVXY. If we're going to see some upside in the market, looking for UVXY to stay under the squeeze top at 12.3, start to work its way down to squeeze bottom at 12, and then slip further to kind of yesterday's low in the middle of the squeeze bottom around 11.8. But if we're going to see further downside, we'll likely see a bounce around 12, that 11.8, come back through 12.3 on our way to 12.5 where some moving averages sit, and then maybe even up to this 4-hour squeeze top around 12.8, 13. VIX. If we're going to see further upside in the market, we need to see VIX stay below this daily 21 at about 30, 35, 30, 50. Want to see VIX get down below 30 again, back to yesterday's lows, 29.75, maybe even make it to 29.5, 29.2. That's for upside in the market. If we're going to see downside, we'll see VIX get back over this daily 21, back over 30.5, and try to work its way back up to yesterday's highs around 31, where the daily 8, daily 15 are sitting. That's it for today. Hopefully this was helpful for everybody. We'll see you in the chat room. Today is another free day, free Friday, where you can test out our tools and listen in while we call out everything live. So definitely tune in to our voice chat today. Thanks for tuning in, and good luck, everybody.